This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless A Trading Frank. It's approximately 8:43 p.m., fashionably late New York style. If you ever lived in New York, you'd know. It is the 20th of March, 2019. My absolutely gorgeous wife's birthday. She's still as hot as ever that she was when I first met her. In fact, she is, I think, hotter, and that's after 20 years of marriage. So talk about, successful marital life. And anyone who got married recently, I'll teach them marital volatility free of charge. Okay, but it's all good. So on that note, this is Frank. This is a very strategic um, webinar, midweek webinar that we do. We normally do these webinars twice a week, sometimes 3 times a week, depending on market conditions. Session will be recorded, uploaded to the Google YouTube channel. Full disclosure, this is purely for financial education, not for any solicitation or advice. Please follow us on the Instagram channel. I have already started this evening to post some of the charts, options charts, and a couple of the other more prominent highlights of what we did today. And I think you owe it to yourself to look at it. Some of them you guys might have done it. Some of them didn't do it, but at least it should excite you to do it. So that's just the way it works. It's simple. Without excitement, you're going to be a shitty trader. Excuse my French. That's it. You have to have passion. You have to have passion. If you don't have passion, don't be a trader, please. Just do whatever you're doing and just don't be a trader. But if you have passion, you have the hunger to make money, like a member here that I'm going to highlight. And again, it's public information, so I can say it. Ms. Bolton, Trina, who's taken an account in the $3,000-4,000 range up to $15,000, probably more today because she said she made money today, and that is in a few weeks, and that is really makes me happy. Nothing makes me more happier when my members make money, seriously, and nothing makes me sadder when they make excuses. Because I'm not a type of person to give excuses in anything. It doesn't matter what comes in your life, you got to fight it. I know your parents might have told you that, but you forgot it along the way as you grew up. And as a trader, all of a sudden, you're all chicken. Well, most people are. I hope my members aren't. And chickens are fine as long as you're frying them and eating them, right? They're not pets. But you need to be strong. You need to, and the only way you can get strong is through the tools that I provide here at Clueless A Trading. On that note, let us begin. So first, we're going to go over some market charts, go get a little overview of what happened today. Today was a very, very critical day, which was the Fed FOMC meeting that I told you all about in the Sunday webinar. And exactly what I told you is exactly what happened. Pretty much exactly what happened. And then after that, we're going to look at some sexy stuff. Excuse my French again. Yeah, we are going to look at some sexy stuff. That's called options charts. How about that? That should get your blood rolling. And even some of you might have been in it. Some of you are not in it. We're going to look at maybe 2 or 4 of them. And we're going to look at some lottos that went from 25 cents up to $1.10, 400% up within a matter of an hour. And some of them that we're going to look at which went from $8 to $15, $16, like Netflix. All right. So let us begin. Let's make good use of this time. Thank you for attending. So first and foremost, what happened today was the Fed. The Fed was, and I'm going to try to keep it as simple as possible. This is the way I used to teach my son when he was driving to school when he was younger. He's 20 now. And so he just drives himself to college. Well, he's been driving since he was 12. He's a big car guy. But I used to teach him about quantitative easing back in 2014, 2015, 2016. And he'd be like, Dad, please. And guess what? He got into one of the most prestigious programs at, it's called Center for Talented Youth, CTY, run by Johns Hopkins University, summer camps, because they asked him a question, do you understand economics? He said, yes, I understand QE. And they were like, what? And whoever was asking didn't probably have any frigging clue about QE, quantitative easing, and he just blurted out in very simple terms what it meant. Well, I'm going to explain to you very simply what happened today. Simple way, all right? Because adults are actually far more open to learning than children are. So saying all that, what happened today was the Fed was very dovish. They basically said, we are not looking to raise rates this year. Of course, things can change along the way. And we are going to ease back on our quantitative tightening, QT, which I am not going to go ahead. Our previous webinars have explained that very clearly what it is. In fact, one of the webinars, I think, mentions QT directly on the title. It basically means you're sucking money out of the system instead of draining the system with liquidity. So if you're sucking money out of your pocket, that means you feel poorer, right? So the simplest way to explain it that if you're doing quantitative tightening, i.e. reducing the huge amount of a mortgage, debt securities, CMOs, and everything that they bought from the U.S. economy and flooded the U.S. When you buy something, you give somebody else money. So basically, you gave the U.S. economy money to bring it up from the depths of the mini depression that we had in 2009, that most people screamed and shouted about, said the Fed was socialist, communist, blah, blah, blah. They pissed on Janet Yellen and Ben Bernanke. These are the finest minds in American, I shouldn't say business, but the finest minds in American economics. But most Americans, obviously, and I say with all humility, do not understand this first basic of macroeconomics. So they're like, oh, this is all this is all bad, blah, blah, blah. And guess what happened? The market went up a gazillion point from S&P 666 to S&P 2946. And now we are getting back towards that again. So keeping all your political garbage aside, the fact is that quantitative easing at that time worked beautifully. Then we moved away from it in 2016. And this is what's happening. While all of you freaked out, didn't buy the lows, I did, told my members to buy it. Now we're going to be all the way up here. Then we're going to be all the way up here. That's my high probability move. And hopefully you guys will jump in. All right? Seriously. Because that's what volatility does. And I'll explain to you why it did what it did today. This huge move up, then this move down exactly to those levels where the breakout happened. This is right before the Fed. This is after the Fed. This is right within the between the hours of 3 and 4, and now after hours this is going on. This is the reason why we follow charts. I am not looking to make you guys some specialists in macroeconomics and finance and stuff like that. That's your job to do, and hopefully you guys got some good grades in college to understand some basics of economics. And if you didn't, well, that's your problem, not mine. So I'm just looking to show you through charts that this is what happens. So anyway, coming down to it, the Fed was good. Let me just put it this way. I don't want to get into quantitative tightening and all that stuff, balance sheet reduction there. The Fed was good. They were very friendly. And remember what the Federal Reserve does, and please listen carefully, all of you. I don't care if you're 90 years old or if you're 16 years old. I don't think we have any 16-year-old members, do we? So the thing is that what the Fed did today was not only great and dovish, despite all the criticism it's going to get. The Fed's always getting criticism. It was great for the global economy. Why? And especially the emerging markets like India, like China, like Korea, and the South American markets, because a lot of them have huge amounts of sovereign debt, national debt that is designated in U.S. dollars, right? So if they are not going to raise rates, as they openly said, unless they see a reason to, unless inflation really picks up, then it reduces the burden on the global economy. Remember, the global economy in aggregate, in total, is far bigger than us. So, in total, we are the biggest economy in the world, largest, strongest, as in GDP, gross domestic product, but the global economy in aggregate is far bigger than us. So now all of a sudden, all the loan servicing they have to do. Imagine as a mortgage. Let's say you have a mortgage for $300,000 or $200,000, and you're paying 5% on it. All of a sudden, the Fed comes out and says, "Okay, we're going to raise rates nuts." So your mortgage rate jumps up within a matter of a month or so, as they or right away they recalibrate it. And if you have variable rate, it jumps up to 7%. All of a sudden, your monthly nut you're paying out of your pocket goes up big time, and you're like, "Whoa!" So your loan servicing. It's the same thing with credit cards. Same thing with auto loans. So that's what's happening with the global economy. They are heaving a sigh of relief, like, whew, the Fed's helping us out by saying they're not going to go on a rate hike binge. So they are going to sit back, watch things as it develops. They acknowledge that the global economy is going through a lot of strain because of the trade war pressure, that the U.S. economy has shown some signs of strain, as in housing market slowing down a bit, which is a pillar of the U.S. market, and all that kind of stuff. So all of a sudden, their loan servicing, as in what they have to pay every month, I'm just putting it in a simple way, like I would explain to my son when he was much younger, is they don't have to pay that much. They don't have to worry about, oh my God, now what are we going to do? And if they say they're going to raise rates, the US dollar shoots up big time. That costs global nations, costs them a lot more to buy all the fine goods and the terrific and all the great products that we sell to the world, because the US dollar is stronger. Because pretty much everything is designated in US dollars. It's not designated in the renminbi, yuan. It's not designated in a Russian ruble or Indian rupees or Kuwaiti dinars or Turkish liras. It's designated in the almighty US dollar. Even the Canadian dollar, the loonie, is a junior partner, inferior to the US dollar. Always remember one thing. As Americans, be proud of the fact that the US dollar rules. You flag that dollar anywhere you are king. Every drug dealer in the world making billions, sending all kinds of garbage drugs into the US, and that's because the US is the biggest consumer of drugs. No one ever talks about that. We always blame the drug dealers because they're running a friggin' business. All right? But who's consuming it? The US consumer. And it doesn't matter where they are. In some boony town in Wisconsin or whatever, they're doing meth. And then some guys in New York, like, shooting up, snorting heroin. That's the reality of the thing. So cut demand, they'll die. So what's my moral of the story? The Fed was good and stopped doing drugs. All right? Canadians are like huge consumers of a lot of illegal drugs too. And I don't just mean pot. So there you go. So getting back to it, serious stuff. The Fed was good. The markets rallied. And then the markets pulled back. So you're scratching your head saying, oh, look, what happened? Nothing. It's because of technical programs that got caught short. Because they weren't expecting the Fed to be that dovish. And we were looking at the charts and saying, you know what? We're going to get a pretty sizable bounce, it looks like. I said that. Didn't I say buy the SPY 282, 284 calls? Of course I did. And I didn't even say it for the 22nd. I said buy it for the 29th. And some I said the 22nd. They went up 100% plus. They went from 85 cents to $1.82. If you know any basic math, that's more than 100% within an hour. And the SPX 2880 calls went from 25 cents to $1.15. That's more than 400% higher. It's time to wake up. Like I said, hashtag time to grow up. Please grow up. So The hedge funds were caught short, and bang, this happened. Then then exactly at that level where the last sell-off happened, and that was on the 19th, yesterday at 2:45, the big sell-off, right? Guess what? That was the next supply zone or the sell zone or the resistance level. So right there, I had that red arrow, not put after the fact, before the fact. So if you're a trader, you should be selling here, you should be selling here, you should be selling here. It hit exactly that, and immediately it started selling. Guys and gals, if these charts are this accurate, what more can I do? I don't think that I don't need an answer. And this is not the first time it's happened. Now, do I predict this sitting in my head with a little crayon on the back of a napkin, like, okay, it's going to go here? No, it's so mathematical. Even you guys can see it. This is what the big sell-off started. Obviously, there's going to be a resistance there. This is where the 25 cents goes to $1.15. So do you need to wait till the last minute? No, you can catch the meat in the middle. And this is all today. Between the low in the market at 12:30, between the Fed meeting at 1:45, 2 o'clock, boom. So these are all the algorithmic high frequency programs do. They got caught short, and bang, things started running up. So they started covering. Buy, buy, buy. It's like a person screaming buy, 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 like some Eddie Murphy movie. No. This is automated algorithmic high frequency trading programs that are moving in nanoseconds. Nanoseconds, not seconds. So it happens immediately. So if you're positioned right, change this color, I hate red. If you're positioned right, then you just nailed it. You're positioned wrong, you suck. In the meantime, while this was going on, we had a complete bottoming of the stochastics for about 2 hours, 3 hours. Seriously, I mean, a child can read this chart. Now, did we know exactly that was going to happen? No. There was a high probability it was going to happen. And I showed you on multiple charts, not just this, on the quad algo HFT advanced charts, on Thinkorswim. Any questions or comments so far?
No, I'm good.
Exactly. Did you trade today? Actually, I'm not going to put you on the spot.
No, I actually didn't. I was working today.
That's a bullshit excuse. That's a complete bullshit. You get the tweets. You couldn't buy something at 25 cents, Nazir? Don't
No,
give me
I literally was in meetings during the FOMC meeting.
I'm sorry, what? But what about the hours before the FOMC meeting? I listen, I don't want to put you on the spot because my business is not to put anyone down. I'm just saying you start waking up, Nazir. You're a very smart guy. Okay? You keep on giving yourself excuses, you're going to remain where you are. You're going to cancel your service in a month, and you're going to just blame whatever you want to blame. That's not the way I want you to go. You're a smart guy. I've talked to you. I like you. I think you have a lot of potential. You need to act a little bit more. You're telling me that you couldn't buy a call with less than $1. Throw in $100. If you lost $100, would your wife throw you out? Stop laughing. I'm serious. If you lost $100, would your wife throw you out?
No.
Exactly. If you lost $10,000, your wife would actually think about throwing you out. Correct?
Yeah.
Exactly. So my point is, when you can play with limited amounts of money, why don't throw some in based on what I'm telling you from point one and just leave it there? So if you lose that, you lose that. And if you win, you made yourself $400, $500. Take her out to a beautiful dinner. End of story. So bottom line is that, so anyway, stochastic was completely bottoming. And And this is what happened. So we hit that supply level, and exactly there, they pulled back. So the Fed story, I explained to you in a simple way. The Fed was very friendly. It's the global markets love it. The talking heads who always want to hate everything that the Federal Reserve does, they always have to come with some criticism, because the Fed did say that the U.S. economy is showing some signs of slowdown, even though everything is on the right track with GDP growing at 2% plus. He said that in the press conference. They will still find some fault. Remember, people who are miserable always find fault in everything that happens in life. So, so that's not what we are here at Clue Trading. So aside from that, is it a green light to just go, go, go? No, we have other things, risks in the picture. That's what I want to talk about next. We have the stupid Theresa May Brexit crap going on, which still hasn't been resolved. She's now begging for an extension from the European Union, who are a bunch of old, very rich guys who don't understand what is, what the electorate or some part of the electorate in England wants. Brexit overall is a crappy deal. And Brexit, I'm not saying should be scrapped. It should be modified to a degree where it doesn't hurt the UK economy. All right, period. So there's the Brexit risk. But that's been postponed right now. She keeps on even getting rebuffed by her own people. So she's in a real bind. And she's a smart lady. Next is the US trade-China deal. So here comes my boy Donald from New York. And he's like, well, we're going to keep the tariffs on that. Well, we already know that. And then right after that, he says everything is great, going well. That's like New York speak. It's called double speak. All right? Everything is going well. Because if everything wasn't going well, then why would Mnuchin, our Treasury Secretary, and the trade negotiator, head trade negotiator, Lighthizer, be flying to Beijing next week? What, to eat some more great lo mein? I mean, come on. Obviously, it's hard. The Chinese are very tough. We are very tough. But there's a lot of smart people talking. Because, believe me, we need them and they need us. They walk away from this deal, their markets are going to tank bigger than ours. And believe me, our markets are not going to do too well either if the China deal doesn't work out. They're going to be down anywhere from 2,000 to 3,000 points, just like, hear this, boom, just like that. And then we're going to buy. Yep. But has anyone won a 3,000 point drop? Does Donald Trump want the U.S. electorate, the voters, like saying, "Oh my God, there goes my 401k again"? No, he doesn't want that. So it's important to him too to get this deal done, for the right reasons. So U.S.-China trade deal, very, very important. The Brexit crap is secondary, but still important. And those are the risks that are facing the markets right now. The Fed and Jerome Powell, they're good people. They really care about the U.S. economy. They don't give a crap about Democratic or Republican politics. And guess what? Trump pissed on him so many times about, well, he loves rate hikes and quantitative tightening. And I know, believe me, I know the Trump organization well. Back in my Wall Street days, we raised a lot of money. And I've said this before. His CFO used to come to our firm for him during his bad venture with the Atlantic City casinos, which I will say as a Republican, my clients lost a lot of money. And you think Trump understands quantitative tightening? I don't think so. But he doesn't like the fact that, the Fed was really hard on raising rates just a few months ago before he changed his tune. The October-November crash was because of the quantitative tightening talk. So now he's backtracked completely. What more could he ask for? It's a gift. So key is that this is what happened. The hedge funds got caught, and then they started selling hard. They pressure. Remember, they have money. They don't have that much money. It's like they have money, but they leverage it, 5 or 10 times. So if they have $1 million, they're trading with 5 to 10 million. We can only trade with 4 times margin on a day trading account, right? Or if you're doing cash options, you're just paying with cash. Can't even use any margin, which is good. So they're pushing it. So they pushed it down exactly at that level, and now it's doing that. What does this? One sec. I'm asking everyone a question, so feel free to answer. What does this pattern look like? What's that look like? Forget the pattern. What does this look like in alphabetical terms? Please, quick. Please don't waste my time.
Double bottom W.
It's a W. And it's also known as a dragon bullish. Okay? A W pattern is great. This is a head and shoulders pattern. This is the inverse head and shoulders pattern. Double bottom top, double top. This is negative. This is good. The M pattern is bad. The W pattern is good. It's known as a dragon bullish. No, Mary, it's not a double bottom. It's called the dragon bullish. I know what you said. I know what you meant, but I want you guys to know the terms. I've used it many, many times. It's called the dragon bullish. This is a dragon bullish pattern. Guess where it stops again? Exactly here. Or maybe here. So as a tactical trader, make frigging money using these charts. Now let's look at a bigger pattern. This is more exciting to me. So even if we dip lower, and unless we break each support level, that's a different story. Anything can happen. We can wake up tomorrow. We can have a tweet coming out of Donald, which I really don't want any early morning tweets. And Mary did, MB did mention one thing that he's gotten a lot better with his tweets because somebody took his phone away when he's, when he's waking up in the morning. We don't get those 6 a.m. tweets like blasting like other countries and U.S. companies. I hate that stuff. I hate when Donald goes against our own companies. That's like shooting your own foot and saying, okay, I'm going to keep walking, but I'm going to put a couple of bullets on my foot. Yeah, Amazon sucks, Facebook sucks, blah, blah, blah. Keeping all politics aside, you don't go after the companies that make America great. This Make America Great Again slogan is all fine and good. What makes America great? What makes America great are smart people, hardworking people from all walks of life, and U.S. business. So wake up. Make America smart again. That's a better frigging slogan. Because we're always great. When was the last time we weren't great? So the key is, thank God that we don't get any 6 a.m. tweets. I don't want to jinx it because I really don't want those. So the key is, and as a New Yorker, I am allowed to scream and shout at him and praise him when he needs to be praised. Because we don't idolize any human. We idolize God. So if somebody is blindly idolizing Donald for everything that he's doing, right or wrong, then they are truly stupid. Next topic. So overall, even if we pull back a bit, I would see that this is still looking like a large inverse head and shoulder with, again, the target where it should go to, which is up here. Now, our longer term picture said that we were in this acceleration channel, if you guys remember correctly, right? This was acceleration channel, this dotted line. So look at this, continuous buying going on after hours, systematic. You think that's you and me? No, it's friggin' machines operating in the Globex markets, operating in our markets during the day. So bottom line is that, I'm gonna move this up. There. These charts are designed so you guys can manage your trades. Yes, it's not easy because it's volatility, but it's not that hard. It's really not that hard. And as long as you're not putting in tons of money into one trade, like an S&P trade, whatever, you're okay. If you're sitting around doing nothing, you're not okay. And I believe that certain, I don't know if members or not, but retail emotional traders, what we call RET traders, are constantly doing that. And when you ask them, then they say, I'm learning. Well, how long are you going to keep learning? Till you go on welfare? Seriously. So here is, just trying to set this up because this chart was there for a while. So this is where we are. So at this point in time, something big has to happen, like a catalyst, for us to enter this zone, this acceleration zone that we were traveling in all the way since the 12th of 11th or 12th of March, right? That's what we were doing. Then we fell out of it, tried to re-enter it, failed back today. So in order for us to get back in this zone where we get into that high 2800 levels, we need a big catalyst. What is that big catalyst? Come on, guys, just participate a little bit. What's that big catalyst that is going to take us into this channel, into this acceleration channel, this dotted line?
Trade war news?
Exactly. U.S.-China trade deal. Exactly. Simple. Come on. No Harvard MBA is going to teach you this. You've been learning it here. It's not rocket science. Yes, you're right. Correct. Thank you, Nazair. And by the way, Nazair, next time you be a little bit more forceful. When I was doing my introductory call with you and we were talking and I was explaining to you a bunch of stuff, I kept on calling you Nizar. So you should have corrected me and said no. So, and I didn't want to call you Nas because then you'd sound like NASDAQ. But yeah, exactly, right? So next time if I'm calling you Nazar, you'd be like, hey, shut up, Frank, my name's Nazair. So all right, I don't want to murder somebody's name. So there you
Yeah,
go.
that's fine. Yeah,
Yeah,
thanks.
exactly. Yeah, stop being so polite, all right? As a trader, you need to be a little bit rude in a good way, as long as the intentions are the same. Trust me, and it's going to work for you well in life too. So don't try that in marriage; it never works. So anyway, so this is the level. So in order for us to do that, exactly like you said, we need the U.S.-China trade deal, or with that coupled with the Fed's out of the way right now. This is a very important Fed meeting, and then we and of course Theresa May has to get her act straight. She's trying, poor lady. And then the Trump Jr. is like telling her like, oh, if she listened to my dad, like that's like really bad. The Brits don't like when some young kid who's shooting rhinos, okay. I personally don't like Trump Jr. I think he's a real dick. I've actually met him a couple of times back in my days. I don't like that kid. Trump himself is actually a very likable guy. But his son, like telling the U.S. UK government, the British government, that I read that. I'm like, what? Honestly. And this is not coming from some democratic, liberal, left-wing guy, Frank Clueless Trading. It's coming from a really hardcore guy here, okay? That's like the stupidest thing ever. Anyway, but that's, he's got a right to talk as long as he doesn't keep on shooting innocent elephants and rhinos. That's fine with me. So that's it. So on that note, that's what we need. And hopefully we get that. So now, that's your picture of the market. So let's look at some options charts, stuff that like I said, the sexy stuff, all right? So let me get a chart. Let me find it. Thing here. Let me see. I'm doing it on one of my accounts here. And let me just change the marker. That's actually a beautiful chart of the SPY. that I've shown to you guys many times. If you care to look, I'm sure you guys did. That's a bull flag. That's a bull flag. Nothing happened here. Nothing. Nothing to see. Please, don't be that scared. No parachutes needed. No diapers needed. This is good. It's a bull flag. Here's a 20-day moving average, 2279.33. If we break that, we got another support at 277. We break to 277. Me no likey. Okay? Because 277 is your 34-day moving average. That means we're going to be retesting the 50-day moving average at 271. And that, ladies and gentlemen, is a big drop. We already tested that. And I said, buy. I don't need to remind anyone. I'll say, didn't I? Like a little kid. Didn't I say that, mommy? Well, I did say we're going to fill this gap. It did happen. And bang, 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 the market went up. And then we have a minor retracement looking beautifully like a bull flag. Could turn out like this. We could go lower. There could be a Brexit blow up. There could be further tweets. There could be some really bad earnings, which we didn't get tonight. Nike's coming out tomorrow. Hopefully that doesn't, it's a Dow stock. We had FedEx, which we're going to look at in a minute. Dow stock down $11. Who said buy? The calls at $1.40, $1.50, $1.60. Where did they go at the end of the day? $3.75. That's a lot. Even if you bought it at 2, forget about $1.50 or 60. When I called it, it was $1.50 or 60. The 375 divided by $1.60 is 134% net profits, 234% gain. So should I ask this question? Yeah, I will. Because after all, I'm running this webinar. Did anyone trade those for any amount of profits? When I said buy the reversal trade? Please don't waste my time. Just answer yes or no.
I didn't take it.
I know you're busy and stuff. That's a good excuse, but next time don't do it. So you missed like 2 amazing trades. Anyone else? Mike? Okay, no one wants to answer. Okay, great. No problem. So the answer is basically a no. That's a beautiful trade. You just buy like 1 or 2. Said, okay, I'm going to buy $160 worth of it or $320 worth of it. And the next thing you know, you more than double. You basically more than doubled it. Just seeing you a simple example. So on that note, let's look at some options trades. So starting off with the options trade on the one that we just spoke about, which was FedEx. So I'm going to set it up and bring it into the picture. These were the Friday. Remember, we're playing a fast reversal trade. So February 22nd, 172.5. So I said, please buy. I didn't say please because I don't have to say please. Why should I say please? So let me pull this down. Give me a second, please. Oops. Because like they say, seeing is believing. Like that old Chinese proverb which says, a picture is 1,000 words. That's why we trade charts. Bingo. So while everyone else was crying and shouting, and these calls basically collapsed, you could have made a decent sum of money if you did the earnings. If you didn't do the earnings, the basket, fine. Then it was a disaster. They went to $1.25. 1 second. That's better. So this is how you recoup a significant amount of money. Happens a lot because I show a lot of great reversal trades. Here's one options chart, okay? So how do I detect reversal trades? Well, that's me to know and for you guys to learn on the advanced coaching sessions. I follow candles. I look at volume. I look to see, those are the two things I look at, volume and candle. And then I look to see overall support levels on a slightly longer term chart. Those are the three things that I use to detect whether or not it's a viable reversal trade. I would say 70 to 80% of my reversal trades work out tremendously well, even if it's for a few hours or a day or two. The biggest reversal trade we did a month or so ago was Electronic Arts. Went to 73 to 90 plus in 2 days. They garnered more than 3,000% on your money. I mentioned that before too. Some people did do it, so congratulations to them. Reversal trades are great. Let me ask that question for a pretty simple reason. What do you think that is? What crosses your mind? Because after all, I'm trying to teach you guys something, so I'm asking you all a question. Why are reversal trades great? Not all, but some. Why? There's one response I'm looking for.
People may be taking profits at support or resistance.
No. That's part of the answer, not the answer I'm looking for. Anyone else care to even answer, or everyone just basically is just shunning me, which it kind of is insulting if you ask me.
Means the bottom's in? Or there is a bottom?
Both of you have somewhat correct answer. Mary, you have any suggestions why reversal trades are... Sorry, I guess you can't hear me. No, I can't hear you at all. Oh, okay. Oh, I'm sorry, Mary. Okay, so both of you are correct. The bottom's in and people are looking at support and resistances. The answer which gets the higher weighting, for if this was a Harvard interview, is Trina's answer, because we know what the bottom is. And the bottom is detected, not necessarily on this options chart, is detected on multiple fronts on the charts. Yes, because we know kind of with a high probability what the bottom is. I'm not showing you the FedEx chart. I'm just showing you the options chart. Then we can look at the FedEx chart. Yes, you're correct. And so is Nazir. It is a support level. So given that, and this is the options charts from the FedEx that I recommended today, the 172.5 calls. No one buys 125 other than some fast frigging algorithmic high frequency trading black box, because I didn't even see it go to 125. But somewhere in here, you could have bought it. And then it went to almost 4. These are big money trades. Big money trades off a disastrous open. So this was a trade which netted profits of somewhere around 130% plus. Now, don't know it's going to go up there, but if you look at my FedEx chart, if anyone cared to look at it, I told you, I showed you a FedEx chart with the Fibonacci retracement. Anyone remember that? Just answer yes or no, please. I don't have all night. Okay, Mary does. And I'm going to remind you guys what the FedEx charts right off the open, what it looked like. And I said buy. I'm just scrolling through my Twitter feed on the other side. If you guys didn't bother looking at it, it's your loss, not mine. And please, no excuses. 1 second, I'm almost there. Ah, got it. Like they say, charts don't lie, traders do. Bingo. This was my construction. That's what my job is to put the roadmap down. Your job is to understand it and follow it. So this was the bottom. I saw the hammer reversal. I drew the thing. I mixed in it with some fundamental analysis based on what the FedEx chairman had said, other than the fact that he saw a slowdown in the global economy. Remember how Wall Street works. I come from there. Looking backwards doesn't pay any bills. It's what's he saying going forward. He's saying things are getting better, but there's this trade thing hanging because we have a trade deal not done with China. Trust me, everything is going to slow down. Shipping, international freight, everything. You think mom and pop are going to be happy with the trade deal not done? I don't think so. So bottom line is that he said he sees some green sprouts. Okay. I'm looking at my charts, mixing it with what he says. Because I analyze a lot of things before I just throw something out. That's what other services do. They don't analyze shit that's out there. The macro fundamentals, the macroeconomic news, what the Fed's thinking, how it's analyzed in the real world. They don't have a clue. They just say, buy it. Okay. Oh, 50-day moving higher, going higher, and the next thing you're losing all your money. We are the masters of managing volatility and not getting all crazy, terrified, scared, ordering more adult diapers from Amazon or Jet.com that was bought by Walmart, right? Didn't they get famous by selling diapers? So no, we don't do that. We look at charts. So we got it here. I saw a constructive pattern. To me, this is a constructive pattern before it happened. So right around here, buy. Could have bought it at $1.40, $1.50, $1.60. This was in the morning. Where did the stock close at? The stock closed at 175.18. Right here at that downtrend channel. These things I teach extremely well in the advanced coaching sessions. I have to say it, I have to plug it. Because people who take those make a lot of money. People who don't, some of them don't really, are faster learners on their own, they do it. But most people are not fast technical learners because technical analysis is not something that comes naturally to people's brains. You have to look at it in a very mechanical way. So when the ones who take the ACS and stuff, they tend to pick it up faster. So that's the reason why I keep pushing that. So that you guys can do a little bit better and remain as loyal members for a long time. Aside from that, I really don't care whether you guys make money or not, honestly. Why should I? Do you care if I make money or not? All right, next move on. So the stock closed at 175, right here. And the Fibonacci retracement, 50%, which is where I think it's going to go, is 176.60. How many of you want to bet me that given some somewhat favorable market open, that the stock is going to hit the 50% Fibonacci retracement, which I've shown a zillion times on these big waterfall declines. Panic declines, you can draw Fibonacci retracements, and you can pretty much bet it's going to get to the 23, it's going to get to the 38.2, and it's going to get to the 50% retracement before it pauses. And this move alone to 175 here was good for roughly 140% rounded up on your money. End of story. Let's look at, so if somebody tells me, oh, I couldn't buy something at $1.60, I said, okay, that's fine, thank you. And you don't necessarily need to hold on all through, because along the way there was one big sell-off, but you could have at least sold this candle. Let's look at another one. Big one. Let's look at this is let's look at the S&P. Bear with me 1 second. Trade SPX. I love these ones. Really loved it. I wish I had like a gazillion amount of them. I did have a decent sum. These were the 2880s that I asked people to buy yesterday. Okay, expiring 22nd of, expiring this Friday. Okay, 2880. And give me a second so I can set it up. In the meantime, feel free to ask me any question you like. Insights from my favorite cologne or what I feed my dogs. Just go ahead and my cats. Go ahead and ask any question about the market you'd like when I'm setting this up. Please feel free. Don't be shy. No one has any questions. Okay, that's great. And please have a microphone next time if somebody is attending these webinars. So much easier on me. Okay, let me try to pull this in. No, I'm not looking at. Got the wrong one. Hold on, please. Mary's asking IW if she can charge. Sorry, my mic is not working. I'm not going to be charging IWM right now. Let me show you the options trades and stuff, but I can show you IWM maybe at the end of the session. I'm showing you guys what we are doing right now. I am not trading IWM, even though it's a great trade. There's so many other great trades out there, but I will try to show it. I'm just trying to show some options trades to get some members a little bit excited, including many of you who just sat around and did nothing. 1 second. Trying to find it. Okay. I think I got it. I got it. Now remember, these are expiring 2 days from now. Bingo. So I'm asking people to buy these things starting last Friday, actually. All right. So please look carefully. Highlight. So last Friday, I said, buy this 280. This was Friday. So you could have bought it at around 50 cents. You could have bought it again around 50 cents. In fact, I think I started on Thursday saying buy the 280, 2880. Thursday or Friday. Both days I said buy it. The cheap lottos, just buy it. I'm expecting some big things happening. So you could have pretty much bought it around 50 cents. All right, these are the S&P 2880 calls. So 50 cents, it ratchets up big time. It goes to 320. And that happens on yesterday. I'm not even talking about today's trade. I'm showing you starting. That happens yesterday. So your 50 cents goes to $3. Can somebody step in and tell me what percentage return on that is? Not net ROI, but what percentage returns when something goes from 50 cents to $3? Come on, people. When something goes from 50 cents to $3, what is the percentage return or rise? Are we going to go into silent mode all night, or can somebody please answer? This is great. Nazir, can you answer at least?
Should be 600%.
Thank you. So what did it take you so long to answer?
I was actually doing something, sorry.
Try to focus while we're doing this webinar. Seriously, I like you. That's why I'm going to keep up on you, all right?
Yeah.
Seriously. You're going to be an amazing trader. I know that. You just need to get out of your shell, and I'm going to get you out of your shell. Believe me, that's my mission statement. And you're going to thank me 3 months down the road, 6 months down the road. I mean that. You're a good guy. All right. Yes, you're right. 600%. That's huge. That's beyond huge. Somebody called X just walked in. Who's X? X, can you identify yourself before I X you out? And by the way, I forgot to put this webinar link on the Twitter feed. How sad. Okay, 600%. So forget that. So let's talk about today. X, can you identify yourself, please?
This is Sue.
Hi, Sue. How are you? Sushi?
Yeah. Yes. Fine.
Hey, nice hearing your voice. Okay. I like X walking in. All right. So no, glad for it. Thanks for stopping by. Sue's been with us for a long time. So okay, so let's talk about today. So that was 600%. All right, let's say you missed that. All right. So here I'm asking people to basically buy this thing starting yesterday, starting Wednesday. So again, you can buy it again at around 25 cents. You can buy it at 40 cents. You can buy it at 25 cents. This is Wednesday. That's today I'm talking about, right? Sorry, talking about today. I said buy it, the 28.80s. So let's say, and I said buy it yesterday too. So yesterday they were around $1.75, 95 cents. So you dollar cost average. They're down to 20 cents. Okay, you know. All right, buy a few more. Because you have to correlate with my S&P chart, what I'm showing. Because I can't put up real-time options charts during the day. In that case, you're going to double my fee for my service every month. That's a lot of work. I do this on my own. On the side, show is some of them. So you buy them at 25 cents. You know, you don't lowering your costs down big time. And then comes the Fed meeting. Bang, 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 bang. They go from 25 cents to $1.16. Now they're fast-moving things, right? That's 464%. Did I catch 464%? No, I didn't. Yeah, if I was some other service, I'd be lying out of my teeth. Yes, I caught all of the 464%. I just made myself $100,000 on that trade. Yes. My name's Frank Clutese Trading. Please join us because I'm going to make you a billionaire. No, you're not going to hear that kind of shit crap on my service. No, I caught a good bunch in the middle because I had a whole bunch at 25 cents. And then I added more on these acceleration candles. So if you put in, let's say you bought 10, that's $250. Let's say you were not involved in this, but you said, hey, 25 cents, I'll buy 10. My wife's not going to throw me up. My husband's not going to throw me up. My dog's not going to bite me. I still have money for cat food, feed my kids, all kinds of good stuff. So, okay. So you got $250 plus 464%. I'm doing this on my $1 Dollar General calculator. You just made yourself $250 to $1,660. One trade. That's it. And even like I said, most people, disciplined traders like me, we catch the middle. So let's say you, instead of 660, you make 1,000. Or you made 500. For 1 hour's work, a top New York lawyer charges you 1,000 plus to $2,000 an hour. The average lawyer charges you $500 an hour. The garbage lawyers who think that they know it all will still charge you $250 an hour. You're making a heck of a lot than all of them. All for just having the gumption and the smarts to put in a little bit of money into the trade. Instead of sitting there in analysis paralysis, oh my God, Fed Jerome Powell is going to kill us. I don't want to look at charts because I'm too busy with meetings, even though the Twitter feed is completely real time and you have complete access on your iPhone and your Samsung or whatever other device that you use. And you can put in one trade, please. Please. This is what we're doing here, guys. And this is not the first day it's happened. It happens a lot. Think, please, and act. See, Mary bought 70 cents and then cost average. Approximately around where'd you sell? I wish you had your mic on. So roughly where'd you sell? Doesn't matter where you sold. I'm just asking. Okay, she'll probably type in. So anyways, this is what happened. So let's take a look at another option, higher price one, Netflix. Complete momentum trade. We've been trading this very nicely all week. She sold it at 75 cents after cost averaging at 70 cents. I bought 70 cents then cost average. No, what was your cost average? 45 cents. Awesome. So she made 30 cents on 45. She made herself 66%. Congratulations. Absolutely. I sold my first batch around 80 cents and then ran it a little bit up into 90 and then $1. I was all out because that's when it gets frothy. Good job, Mary. And these are the cheap ones you can do. So let's look at Netflix. I told people to buy not even this week's, next week's. I had the 360s and stuff. I kept on like moving the strikes up, right? Showing the charts on Netflix. Anyone remember the charts on Netflix? They were so clean. You could just lick it off the floor. And I'm going to show it to you right now. Excuse me. My apologies. Hold on. No worries, Mary. Thank you for participating on, at least you're texting in. Her mic is not working. Okay, hold on one second. I never get allergies. I shouldn't say that. In all these years, I never got allergies. All these Zysol and Claritin and Benadryl and all these allergy drugs, they'll be out of business if they're guys like me. I shouldn't say that because I'm sneezing now. Okay, so I kept on showing Netflix. When it started to, I saw the candle develop with a defined double bottom. Remember this chart? Come on. I don't care if you like Netflix or if, like I hear from some traders, well, I don't know that company. Well, so you don't know 90% of the companies out there. Did you know Carvana? Did you know Trade Desk, TTD? Did you know whatever? Did you know Tandem Diabetes? Like, it doesn't matter what you know or not know. Some traders will come and say, I don't know Netflix. I'll be like, oh, okay, that's great. You must be a Mormon or living out there in some cave. So define double bottom. Define double bottom between yesterday and today. That's a 15-minute chart. You can trade off 15-minute charts very effectively. So you got that defined double bottom right here. You start to see the first candle develop big time. You know they're going to run the stock. That's how it happens. So I showed the stock at 364. I showed the stock at 361 as it broke above. Showed the stock around 360. I did not show the stock right at the bottom. I won't lie to you. And then, where did the stock go to? I said first move was going to be this supply zone here, which is around 367. 367. Stock just blasted through. And Netflix closed at 375 up here. I got to now go into the hourly charts, which I posted, to show you that the next level is 380 to 385. When the hedge funds start trading this baby, as they always do, they don't move in a dollar increment. They skip and jump. That's why the charts are so important that I put out there for you guys. So even if you play this move here, let's look at the options. The options went from roughly $8.40, and the stock went to the stock closed at 375. So right here somewhere, the options run from 840 to 16. So these are more expensive options. You paid $8. So let's say you bought one. So that cost you $840. And you took out $1,600. It's not a 400% gain, but 840 went to 1,600. Not bad. In fact, great. Imagine if you bought two, you made 3,200. Not all traders are like all scared and skimpy and stuff. They just put in some money. They bought four. That cost you $3,200 at that $8 price, and they sold it. I'm not saying you have to sell it at the top, but let's assume that that's where it went to. So you sold 3,200. You basically took out $6,400. Wow! Tell me another business you can make $3,000 to $3,000 plus within 2 hours. Yeah, if you're a LA plastic surgeon fixing, what? And all the fake celebrities and all their fake stuff. Even then, you have to work really hard because you don't want to botch up that nose or other things that I'm not going to mention here. Here, you just got to look at the charts, put some money in, just sit there. Is this the first time it's happened? No. If it's the first time, okay, I'd be like, whoa, this happens a lot. So let's look at the options chart. We were talking about because I kept on moving the strikes up, but this is the one we're talking about, which is basically the Netflix 365s. The 370s, by the way, went nuts. Nuts. Do you know, can you guys guess how much the 370s went by? Is this real? 1 second. And I didn't see any news on Netflix. None. Other than the same old garbage that Disney's going to eat them up and blah, 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 blah. Disney. What a garbage thing. Seriously, the stock I'm talking about. 1 second, guys, and then we're going to wrap up. So let me get Netflix here. Wow! This is disgusting. And I'm going to say one word, so please forgive me for that. This is what options trading is all about. And this happens quite often here at my service. In between the losses we take and this and that, this is what makes those accounts jump up. This is called financial pornography, okay? FP. I don't want to get into it because honestly, this is sick. Since early today, and I didn't promote this. I mean, I didn't suggest this. I'm not going to lie to you, but I'm just showing you. We already got some beautiful returns on multiple Netflix trades, but the one that I highlighted were the three. Actually, why was I showing you guys the 372.5? The one that I told you guys to buy was the 365s. I'm sorry, 365s. Yeah, those were the ones which were up 165%. 365s. But the 370s, this is Wednesday. I'm highlighting this so you guys know what financial pornography or options trading looks like, okay? If you trade it. This one trade can change your mindset and can change your P&L. That's the beauty about this business. Then you wake up every morning shit scared, yet you can be the king of the hill by the first 3 hours. That's why trading is such a powerful business. But you have to set your mind for that. Some mornings I wake up and like, shit, futures are down 13. I'm long these things, but I don't cower in fear like most other people do. I go to walk. I drink my coffee. I sit there and I say, I'm going to attack this market. I'm going to make that money up whichever way it takes. No excuses. So these things went from 63 cents to $8. Holy cow. That's 677%. You could have bought 10. If you bought 10 contracts at 63 cents, how much is that? Quick, somebody.
630.
Thank you. And if you sold it, I'm just showing you extremes, obviously. If you sold 10 contracts at 8, how much is that?
8,000.
Thank you very much. We've done a lot of these things around here. Now, do you think somebody buys exact bottom and exact top? Sometimes you get lucky and say, okay, the first one you got it. But even if you catch them on in the middle, $600 go to 8,000. Your wife's gonna love you, and your husband's gonna love you. Your dogs are gonna love you. Your kids are gonna be proud of you, and you're gonna be, most importantly, you're gonna be proud of yourself. It's like, wow, I caught this whole move or a good portion in the middle. I think I'm gonna look at charts more. I can sit here all night with you guys and show you these multiple trades, whether it's a Google 1220 call, whether it's a Facebook, which went from 39 cents to $1. And I'm still long because Facebook, I keep on showing you guys, wants to go to 168, 170. So the last thing we're going to look at is Facebook. So here's Donald attacking Facebook. They're getting attacked by everybody, from left-wing liberals to hardcore right-wing guys to Donald Trump. Facebook sucks, blah, blah, blah. What's Facebook doing? Just doing their job and moving on. And the stock is rising. So everybody's attacking them, all political stripes. And Zucky is just doing what he needs to do. Because trading is not a political game. So let me just show you. So the Facebook 170s, I said buy it a couple of days ago. 2 days ago, I believe. Not the ones expiring this week, next week's. Gotta buy time. So let's do this. And pull it in. Wow. Let's see. Come on, baby. Why is it not coming? It refuses to obey my commands, the mouse, and drag on one of my screens. Now it's obeying my commands. So, Facebook. So the last couple of days, I've been saying buy this stock because I don't trade Facebook that often. We did trade it initially when it crashed and burned, and then it started to move nicely, very nicely. Some people say nice trades. You know what my response to that is? Mary knows. I go, nice is a nice picnic in Central Park on a Sunday or some mountain. These are awesome trades. Nice is for babies. Like, oh, you're such a nice little baby. No, you're an awesome kid. That's the difference between a trader, or like Mary likes to say, be nice. I am actually very nice, but I don't want to be nice all the time, because when you're nice all the time, like ask Belichick, ask all these great coaches, ask Vinny Lombardi. Not that I'm ever going to compare to those legends, but they're always nice to their players and made them great superstars, Hall of Famers. No, can't be nice all the time. Gotta wake people up. You want nice? book an Oprah show or go to Wendy Williams or whatever, you know? So let's look at this here for a minute. 39 cents, 40 cents, 50 cents. Where did the stock go? I mean, just today, and it's still going. Look at that option volume. Whoa! Somebody's buying the crap out of it at the end of the day. This is a 1 hour chart. Think this is a joke? Not somebody. Players. 25. Look at the volume. Forget about the number. Explosive. You think they care about Donald attacking them or Elizabeth Warren attacking them or some other idiot in Washington, D.C. saying, I'm going to drag you in front of the Congress. You're going to tell us why you did this, why you did this. Hey, crap. Stop attacking our companies. Americans, as Americans, we love attacking our own. It's like you attacking your own body. Like, please. So, the the option went to roughly $1.10. What's 40 cents or 50 cents to $1.10? More than 110%. And the trade hasn't even, you have 10 days left from this trade. If Netflix, looking at this options chart, there's a big gap to fill somewhere around the $3 level. So even if you buy it here tomorrow and it zigzags around and gets to 3, you just made yourself 200% net profits. God forbid if you bought it at 50 cents or 60 cents, in which case you'd make 400%. Now, if you don't buy any size, you're never going to feel the money. That's up to you. And let's take a look at Facebook's chart, which will give us a guideline whether or not it's worth trading these options. So let's take a look at the daily, which I showed to you guys many, many times. This is Facebook, when nobody wanted to touch it. Every idiot on Wall Street basically said, no, it's really bad. Don't touch it. It's a bad thing. No, don't play with Zucky. No, don't go to Facebook. Just defriend everybody or whatever. Unfriend. I don't even do that Facebook. So, you buy. You buy. You buy. You buy. Where's the stock going? Looks like it wants to get back towards 170. And God help us if it breaks open from there. There's a big fat gap to fill here, and that is 180. That's all I'm going to say. So, gentlemen, ladies, it was very enlightening, a pleasure. Thanks for bringing in the drinks. Mary, thank you for your input. Nazir, Trina, you're kicking it. You're a baller, okay? She's doing 400, 500% over the last couple of weeks. And God willing, you're going to do another 1,000% in the next couple of months, because that's the way to do it, all right? And anyone else who's going to hear this session, finds it helpful, wants to make excuses, please don't contact me. But if you found it helpful and want to get some more detailed information, how you can move forward, definitely contact me. On that note, it is a volatile market, and we know that, but we're guiding you tremendously well. So please, the only thing I want from you guys is not like, oh, you're great. I don't need to know I'm great. When my wife says I'm great, I'm happy. So next time, please tell her I'm great. Please get some referrals. Let's get the community growing. We are a community after all. Some traders leave and this and that, fine. But when they leave for the stupid excuses and this and that, after we deliver these performances over and over again, that just boggles my mind. But we're not beggars, we're leaders, all of us. So we're not going to beg anybody. You only beg God. Okay? That's serious. So please, referrals are important. Follow us on Instagram. Let's get the follower count going, because that allows us to promote our service in an organic way through Instagram. Instagram is the fastest growing social platform in the world. So please tell everybody to follow us on Instagram and hit like on the things that I put out there. On that note, let's have a great end of the week. Next week is going to be exciting. let's wish best for Donald Trump and his team on what they're trying to do with the China trade deal. And that's it. God bless you all. Good night.
Good night.